So we are still considering our checklist when it comes to trading the financial market using our smart money concept. And we'll begin by determining our trend. So we've done what the trend is and we are on the point of interest. So on this POI, which is our point of interest, we are considering the fair value gap. And in the previous video, we've talked about how you can identify your fair value gap in a bearish price scenario, which is a downtrend. So in this video, we want to look at how we can identify our fair value gap in a bullish scenario, which is in a typical uptrend. So for a typical uptrend, if we must identify area of fair value gap, in our previous video we said in a downtrend, to identify a fair value gap in a downtrend, we are going to consider the low of the candle before the candle we are considering and the high of the candle after the candle under consideration. That is what will give us a fair value gap, which means that if it is in a downtrend, this is the candle before, so maybe this is the candle before the candle we are considering, then this is the candle we want to consider, and then this is the candle after the candle we want to consider. So we said in this case we'll pay attention to the low of the candle before, which is this low here. We're going to pay attention to it, and the high of the candle after, which is this zone. So this is the high and this is the low. Let me make it a different color. So this is what, this is the low of the candle before and this is the high of the candle after. So this space in between here is what we refer to as the fair value gap. So in an uptrend scenario, when price is bullish and it's pushing up to the upside, we are going to consider, in a typical uptrend scenario, our consideration now for a fair value gap in an uptrend. Our consideration is going to be what? The high of the candle before and the low of the candle after. So this one is for high of the candle before and then the low of the candle after. This concept is easy and I'm going to illustrate. If you are in an uptrend and you want to mark your point of interest, you are looking for a fair value gap. For instance, this price is giving us a movement to have a bullish candle, so this is a wick, and then we have another bullish candle this way, and then we'll have another bullish candle this way. So what did we say we want to consider? We said in an uptrend we'll consider the high of the candle before. So here is this candle, I'm going to label it as B, which is the candle before, and the candle after, which is this one, I'm going to label it as A. So this is the candle before and this is the candle after. So we are going to consider what? We are going to consider the high of the candle before. So this is the high of the candle before. So you can pick your horizontal line and mark the high of that candle before. Then we said what the second we are going to consider is the low of the candle after. So our candle A is the candle after. So this is the low of the candle after. The low can be the wick. If the candle has a wick, it will be the wick. If it has a body, it has to be the body. So that is it. So connect our line now. So you can see now the high of the candle before and the low of the candle after, because this middle candle is the candle under consideration. So this gap we are having here now, after you mark the high of the candle before and the low of the candle after, this space left behind is what we refer to as what? The fair value gap. So this is the best way you can be able to identify this concept as your additional point of interest. So having said that, let's move to our chart and see exactly how this can be identified. Now this is our chart. This is 500 on our 4-hour time frame, and price is practically pushing. This is an uptrend scenario. So if you look at this, we have this zone as our price area. So price is obviously moving from this zone and is pushing to the upside. So what do we see? We had an internal liquidity that was taken here already. So we want to mark our point of interest. So in these zones, we are having a particular pattern here, which is a fair value gap. So I'm going to mark it out. So this candle here has a fair value gap. So now the candle I just marked out is this particular candle. This candle is the candle I just marked out. Okay, so I'm referring to this candle. So now for us to know how did I get this point of fair value gap, the rule is we need to identify the high of the candle before the candle we want to consider. So let's label the candle before as our candle B. Okay, then let's label the candle after this candle we want to consider as our candle A. So that is candle A and this is candle B. So what is the rule? The rule is you identify the high of candle B. So for candle B, we are going to identify the high of it. Okay, then for candle A, which is this particular candle here, we are going to identify the low of it. So let me begin by identifying the high of candle A. So this is the high of candle A. And then now what is the low of candle B? You can see candle B, this is the low of candle B. So if you notice, you realize that there is a gap in between where candle B, which is the candle before, stop, and where candle A stop. That gap is not permitted to exist as far as the price is concerned, trading is concerned. And because of the presence of this gap, this is what we now refer to as fair value gap. Some people call it imbalance. Some people call it improper price action. This behavior is not expected to occur in a price situation. So if you look at what happened after that, that is the zone I just marked out. You can see that price pull back, fill into that gap 100%. So you can see all of this movement to the downside was an attempt to fill in the gap. So you can see immediately that gap was filled, price begin to spike back to the upside. So you can see that on the 1 hour we don't have it, but on the 4 hour we have the gap, and then you see how price fill it. And our confidence is that all of these zones, these are liquidity built up zone. So you can see how effective this strategy works and how perfectly you can take advantage of this. So this brings us to the close of considering our point of interest for now. If there are additional point of interest in the subsequent video, we will be looking at that. So we'll have our checklist, which is the trend, and then we'll have our point of interest, which is our POI. So the third thing we are going to consider in the subsequent video is liquidity. Okay, so what is liquidity? It is advisable you check, get an additional knowledge before then. This is a very crucial topic because many a time price hit your stop loss, take you out and continue in the direction of your analysis, and you keep wondering why. All these are functions of liquidity, and I'll be explaining that to you in detail in the subsequent video to come. Thank you so much for watching this video to this time, and if you are yet to subscribe to this channel, go ahead and hit on the subscribe button, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. And please do not forget to give this video a like and share. Thank you, and see you in our subsequent video.